Here's a look at what a couple of pro traders at CME Group are up to in today's Market Movers.
Welcome to Market Movers. I'm Jim Iuorio with Scott Martin.
Hi, Jim.
So we have a Fed meeting next week. We're going to hear from them on Wednesday. The CME Fed Watch tool says there's a 99.5% chance that they will do nothing. In other words, they're going to do nothing.
So you're telling me there's a chance.
Is the rhetoric going to be soft like we've heard?
Probably. And I'm thinking of commentary like patience, time, data dependency, things, Jim, that the market has liked recently.
Okay, so do you think the Fed has experienced 2018 like we all did too, and they've come out scared? Are they spooked? Are they worried that they're going to cause something like that to happen again?
That's one way to put it.
Okay.
I would say that the Fed's maybe just come to their senses to the degree that they should have been data dependent all along, and it appears that they're on that track now.
I agree 100%, by the way. Now, before we dive into our trade discussion, I'd like to point out that these trades are examples, not recommendations or advice. We're looking at using trades on the weekly ZN 10-year option. Scott?
Yes, Jim, today as an example, I'm buying the week 2 Feb 121.5, 122 call spread for about 11 ticks. The risk is defined by the amount we're paying for this spread, which is 11 ticks or about $172 for a reward of $328. The ZN underlying right now is 121.14, and I just still think that there's maybe this little hint of a risk-off environment going forward, especially if you look at the symmetry in the ZN in the last month. I believe that we're going to see prices move up.
So what you're saying, and what we saw a lot in 2018, on days when the stock market was really pummeled, we went to the risk-off asset, so people bought the U.S. 10-year, drove rates down. Is that what you think could happen again?
Correct. And the fact that, as you mentioned in your perfect lead-in, by the way, my friend, is just that the Fed is now off the table. So the pressure on maybe the ZN with respect to pushing it down might be off the table as well for a little while.
Interesting. Okay, because I'm looking at the other way, because I believe that 2018 is behind us, the Fed is on hold, and I think it's going to be more of a risk-on sort of thing going forward. So I'm looking at buying the week 2 Feb, the 121, 120.5 put spread for 8 ticks. So the opposite of yours. This trade risks 125 to make 375. When we last checked, it expires Friday, February 8th. The underlying was trading at 121.13, so almost a half a point away from the top strike. Thoughts?
Yes, very close to my underlying. And Jim, I mean, I love it when you're on the other side of me because it allows me to say that I think you're wrong. Okay. But here's the point, though, is the one thing that I think is interesting that's at play now, too, is earnings, right? So we have earnings coming out in this new, let's say, Fed environment where, as we've seen, lousy earnings in the market sense have been taken okay so far. Good earnings have been rewarded, so it's an interesting environment going forward.
I'll take that a step further and say that all good news over the last couple weeks seems to be treated better than it would have been, and I think that's because the Fed has led us to believe there's someone on hold. Thoughts?
You always take things a step further, and that's probably why you're here. And that's also another interesting point, though, to this whole Fed talk, Jim, because if we have a great earnings season, does that put the Fed back on the table if the market reacts positively?
But they won't know it at this meeting.
That's right.
Okay, now thank you for joining us on Market Movers. I'm Jim Iuorio, where we're helping you to become a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.